Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Apple's reliance on China is starting to be a big concern for the tech giant, and investors should at least be aware of how much Apple relies on China to make its most important products. Substantially, all of the products that we buy from Apple today have some involvement with China, and so as unrest continues there, as their zero COVID policy continues, we could see not only disruptions to the company's supply chain, but also risks to its growth overall. So let's get into what some of these risks are and where they emanate from. I want to focus on some of the disclosures that they have in their SEC filings. This is one of the most telling to me. Substantially all of Apple's manufacturing is performed in whole or in part by outsourced partners located primarily in Asia, including the Chinese mainland, India, Japan, South Korea, Taiwan, and Vietnam. Now, the company goes on to say Apple relies on single source outsourcing partners in the US, Asia, and Europe to supply and manufacture many components, and on outsourcing partners primarily located in Asia for final assembly and substantially all of the company's hardware products. So what does that mean in simple terms? What it really means is that Apple doesn't control its own supply chain. It has outsourced that to a number of companies, particularly Foxconn in China. Apple doesn't disclose exactly which partners make which products and how much of it they make, but we have known for a while that Foxconn makes most of Apple's new iPhone products in China. That is starting to change a little bit, which I will cover in just a moment. But if Chinese manufacturing were cut off from Apple, we would see iPhone sales dry up because there would simply be no supply. The company had issues when there was a lockdown in Shanghai, and that really hampered their production of the MacBook Pro when that was released. So this has happened before. Now the concerns are just that much bigger as political tensions and COVID tensions within China get bigger and bigger. So I want to break this down into two pieces. One is the financial reliance that Apple has on China. Here's the numbers that they report by segment. This is fiscal 2022. $74.2 billion in sales come from China. So depending on what happens with the economy there, that is a big chunk of Apple's sales. It's a risk factor that investors need to keep in mind. But the production side is really more important because that's where the company is getting most of the products that it's selling in these high margin regions like the Americas and Europe. Now, has been a move by Apple over the past few years to move some of its production to India. That appears to be moving faster now that they've seen some of the impacts of zero COVID in China and some of the political impacts there. But we're still seeing these moves being really slow. We can see that they began making iPhone 14. That's the latest iPhone in India, but had to delay that because they weren't quite ready to go at the same time that China was ready. Apple has been making iPhones in India since 2017, so this isn't new. But the kicker is that JP Morgan estimates that only 25% of iPhone assembly, that's not the components that go into the iPhone, that's only putting it together. Only 25% of assembly will be done in India by 2025. So that means 75% or more of Apple's production is going to continue happening in China over the next 3 years. That is a massive risk depending on what happens in that country. The difficulty for Apple is that it's so intertwined in China that there's no way to simply pull out. We've been talking about assembly of iPhones, but the component manufacturers of iPhones, those risk factors that I highlighted earlier that Apple puts in their SEC filings, some of those components come from China as well. So if the Chinese economy slows down, if production slows down in some of these factories, even just one component that's single sourced from one supplier could stop production of iPhones, Macs, and other Apple products. That is a major risk if you are a hardware company, and a risk that investors don't seem to be talking a lot about with Apple. Now, to be fair, Apple has handled these political situations about as well as any company can, but they're estimated to employ about 1 million people in China. So they're highly dependent on the Chinese economy. And frankly, China is highly dependent on Apple as well. That is why the unrest that's going on in China, the zero COVID impact, this is going on 3 years now, is going to have a big impact on Apple's production. It has already with plants being shut down, But if there are further impacts over the next few months or years as China tries to figure out how to get out from under zero COVID, there could be a downstream impact to Apple. Now, I own shares of Apple stock. I'm not selling all of them today, but this is something that I'm considering as a major risk factor and trying to think about, is this priced into the stock appropriately? Over the next few weeks, if the stock holds up fairly well, but we see tensions rise, I may actually take some of that risk off the table because Apple has become an outsized position in my portfolio. I've been comfortable with that for a very long time. But this is a risk that I'm well aware of. And until Apple diversifies its manufacturing, I think that investors need to put more emphasis on the outsourced manufacturing risk that Apple has, because there are a lot of things that are out of the company's control as a result. So what do you think about this? Is China something that you have thought about as far as a risk factor for Apple? I'd be interested to hear your comments in the comments section below. Please give this video a like. And of course, follow Rive Investing for my stock market coverage in the future. Thanks so much for watching, and I will see you here next time.